So the Bank of Canada cut the overnight lending rate by 0.25% a few days ago. And while that's great and all, what does that actually mean for interest rates? Well, for those of you who are in a fixed rate mortgage or looking to buy a home and wanting to get a fixed rate mortgage, this announcement actually does not apply to you whatsoever. However, if you're in a variable rate mortgage, this is great news. However, don't worry about the fixed rates. If you are interested in them, I'll be discussing some things later in the video, how this can actually have effect on those as well, indirectly. Hey guys, how's it going? Welcome back to the channel. My name is Jared White with White Ridge Mortgage in BC, Canada. Now, please hit that subscribe button, like this video, and ring the bell to be notified. It does help me out a lot, and I'd really appreciate it. You'll be notified on all the important changes in the mortgage and real estate industry. And specifically today, we're going to be discussing the impacts that this interest rate cut is actually going to have on interest rates. It is a very common misconception that when the Bank of Canada cuts interest rates, people think that interest rates are just going to suddenly drop. That's actually the furthest thing from the truth. The Bank of Canada announcements happen 8 times a year, and never more, never less, exactly 8 times. And the decision that they make, whether to increase them, keep them the same, or go down, only affects the overnight lending rate. Now, at an institution level, they have what's called a prime lending rate, and this moves in parallel with the overnight lending rate of the Bank of Canada. Now, that overnight lending rate is always 2.2% lower than prime rate. The prime rate is actually what your variable rate mortgage is based off of. When you get a contract, you're essentially locking in a discount of prime rate. Now, this oftentimes looks like prime minus 0.5 or prime minus 1. And actually during the pandemic, they were even offering as much as prime minus 1.45 with some banks. So depending on what your contract is, that's the discount of prime you're gonna get throughout your entire term. So if prime rate was to come down, well, you're always gonna be with that same variance on your contract, the prime minus, lower than prime. Now, when the Bank of Canada announces an increase or decrease, this is what's affecting your variable rate mortgage when you already have it. However, fixed rates actually aren't affected whatsoever. Now, for those of you who are looking to get a variable rate mortgage, the recent decrease of 0.25 is approximately equal to $15 per $100,000 you're borrowing in a monthly payment. Now, it's not much, but it's still a start. So if the Bank of Canada doesn't control the fixed rates, well, what does control the fixed rates, you might ask? The fixed rates are directly tied to the Canadian bond market, and the fluctuations in fixed rates being offered is in connection to the changes in bond yields. Now, banks boost their fixed rate mortgages more quickly and drop them more slowly. They do this because they want to guarantee that their expenses are covered when the market changes. So the announcement a few days ago has actually nothing to do with fixed rate mortgages, and well, at least nothing directly is what I mean. But there's a huge argument to be made that the announcement a couple days ago actually does have a significant effect on all interest rates in general. The reason why is there is an indirect effect on the fixed rates if the Bank of Canada is lowering interest rates. And all you got to look at is how the banks like to make their money. Obviously, in a declining rate environment, the bank's going to want to ensure they're making the most amount possible. Therefore, they're going to want people locking into these fixed rate mortgages. And if variable rate starts getting lower and lower and lower, it's going to become more attractive of an option for new borrowers. Therefore, the only thing the bank can really do is start to make their fixed rates a little bit more competitive to make that still an attractive option. Now, with that being said, if you actively have a mortgage right now that you're currently going throughout the process, you have an approval, maybe your closing date's a couple months out, don't worry, your broker or your bank should actually be able to go back to that lender and constantly be getting that lower rate as they start to come down. Now, if this is something that they're not doing for you, I'm more than happy to help you out. Reach out. We can get a separate approval in order, and we can try to beat that rate that you currently have. If not, no worries. But if you're looking to get a pre-approval or you simply want to chat about your existing mortgage, feel free to reach out or use the link in the description. It's 100% free to work with me, and I'd be more than happy to assist you with whatever mortgage needs you have. Now, thanks again for watching, guys, and please take the time to subscribe to this channel, like the video, and ring the bell to be notified. I'm putting a lot of work into trying to make these videos and provide as much value as possible, and it would mean the world if you guys hit that subscribe button and help me out. Once again, thanks. Catch you on the next one.